Okay, fiscal focus time brought to you by InfoChoice, your choice of information on Australian consumer finance. Now, there's a new kid on the block in Australia's home loan marketplace, one which promises to improve access to home ownership with simple and fair low deposit home loans. It's a non-bank lender called Sucasa, which is Spanish for your house. And I'm pleased to say we're joined by its co-founder, Adam Trouncer. G'day, Adam. Welcome to the Savings Tip Jar.
Hey, Dominic. Great to meet you, and thanks for having me.
Thanks for joining us, Adam. So just straight off the top, give us a burst on what Sucasa is about. It's a pretty cool name, and around the office, everyone's liking the sound of Sucasa. It's a pretty distinct name.
I appreciate that. Well, look, at Sucasa, I guess we're the lender that really backs young, hardworking Australians. And so, our mission is to really empower young, hardworking Australians to help them build wealth and a great life. And, we think that wealth is an enabler of a great life, not an end in itself. And so, why we started this business and what we do is to really make sure that, every generation builds a better life than the last. We're a financial services company, and our first product focuses on what we think is one of the biggest issues for young Australians, which is home ownership. And so we provide, low deposit, low rate home loans to reduce that barrier of home ownership. And that comes in the form of 95% LVR home loans without the need of paying LMI.
Yeah, that sounds great, Adam. And that's no LMI. We're pretty interested in what that's all about, because we know that typically lenders will charge an LMI for anyone that has a deposit that's less than 20% of the home's value. And so obviously a lot of people are naturally trying to avoid paying LMI by saving up that deposit. But these days, obviously with record high house prices in many capital cities, this becomes harder and harder to achieve. So can you just explain how you guys are able to get away without charging LMI?
Yeah, no problem. Well, why don't we first kind of chat about what LMI is? So for listeners that don't know, lender's mortgage insurance is sort of an insurance that, most banks or financial institutions charge if you're looking to buy a home over 80%. And what it actually does is it transfers the risk from that lender to the insurer. So you pay the money for lender's mortgage insurance, and if you end up defaulting on the home and the lender loses money, they get reimbursed through the insurer. So the lender's not really taking the risk in that loan in that sense, because they've made you pay this insurance to cover their risks in that way. So we're a bit different, like you said. We're happy to back sort of young, hardworking Australians. So we don't charge lenders mortgage insurance on any of our loans, right the way up to 95% LVR. And how we do that is we've just sort of structured a product in a different way. So we actually write 2 home loans for everyone that comes through Sucasa. One is a primary loan from 0 to 80% LVR. And then we provide another loan, which we call the accelerator loan, from 80 right the way up to 95% LVR in that way. And by having that different structure, we're able to kind of circumvent the need for lender's mortgage insurance. But more importantly, we think kind of young, hardworking Australians are great credit. We think they're not getting a great price in market at the moment for borrowing above 80% LVR. And we also know that sort of saving for a deposit is one of the hardest things to do. So having this big kind of $20,000 to $30,000 smack of LMI on top of already having to save a 10 or 5 or 15% deposit is very hard. And so, that's why we created the business.
For sure. And we'll just keep going on that for a bit because, saving up for a deposit is no mean feat, with the median house price at over 750K Australia-wide nowadays. It's taking, younger Australians, 10 years to save up just for a home deposit. And even then it might not be 20%. So just on that, Sucasa needs to, cover its butt somehow. So how does that actually work for you guys?
Yeah, well, look, we're a lender, so we make money by lending out money at a higher rate than what our investors require, and so that's how we make money as a business. I guess we're different in the sense that we're happy to take the risk, so we're not forcing customers to pay for lender's mortgage insurance and transferring that risk to the insurer. We're happy to kind of credit assess and understand who our borrowers are and make sure that they're great credit. We think there's a big mispricing in the market, really. We think there are a lot of very creditworthy borrowers out there who have good jobs, good incomes. They might be professionals, they might be in skilled trades, that, are being charged too much, really, for home loans above that 80% mark. So, our focus is really being, best priced in market for loans between 80 to 95% LVR. And, that's a huge audience. You said sort of saving for a deposit. I guess there's a couple of ways in which you can get into a home these days. One is the best one, having rich parents and being able to have some people give you money or guarantee your loan. That's not available to a lot of people. Second is obviously the home buying kind of scheme, the federal first home buyer scheme, which is great for some, but it's below a certain income threshold. You need to be a citizen or a permanent resident. And the third is, typically taking a loan out with lender's mortgage insurance. We've sort of created a fourth now, which is, we're able to kind of back young Australians without the need for taking that LMI. And so that reduces the need to have that big deposit. And it means that they can get into their own home sooner. So, yeah, that's sort of what we're about.
So Adam, obviously Sucasa is a non-bank lender, so obviously it doesn't have a banking license. Now, there's quite a few non-bank lenders in Australia, but I just noticed whenever I talk to people, and sometimes I recommend a non-bank lender that has a pretty sharp rate, they seem to be quite wary of them and seem to think they're not as trustworthy as banks. So it does seem like there is a bit of a stigma around non-bank lenders. Why might that be? And, what could you do to convince someone otherwise?
I think the thing that I'd say is that a lot of the existing non-bank lenders are typically targeted at borrowers who aren't prime customers. And by prime customers, I mean those that could get a loan from one of the big four. So they might be low doc loans. They might be sort of, self-employed, with tricky circumstances. They might be lower income. I guess we're a bit different to that in the sense of, really at Sucasa, where our borrowers are people that could get a loan from one of the big four, that are prime borrowers, that do have good credit history and that, do have good stable jobs with decent incomes, but they just don't have the savings or they haven't, had that 10 years in order to save that deposit in order to get into a home. And so I think that's where we're different. Like, how do we build trust with an audience to get to know them? Well, look, the three founders are three young, hardworking Australians that are going through the same challenges. We set up this business in order to help people just like us. Friends and family and other people we know, we're all in this bucket. And so, I'm happy to kind of earn and build that trust at Sucasa with customers over time. It doesn't come overnight, but our aim is to become a very important financial institution in this country. So we'll do it one step at a time.
Cool. So Adam, just explain, maybe on a more personal note, how it was launching a mortgage lender. I think you guys launched the public late 2023. So explain how that was, with rising interest rates, maybe more challenging environment. You're a non-bank, you can't take deposits. So explain a little bit how that was for you and your team, and explain how you're funded essentially.
Yeah, no, great question. Look, it takes time in order to set up a new financial institution. There's obviously a lot of compliance. There's a lot of, system setup, and there's a lot of things. The co-founders and I come from a tech background, so we wanted to really make sure that our tech systems, all our consumer apps and stuff are in a really good spot. So that took a bit of time to get right. On the investment side, we're very lucky to be backed by some, very good sort of VCs and investors. So, you can check out our About page to see who's backed us. But you're right. The last 2 years have been very tough on, young Australians, especially, rising interest rates, inflation. And so, although it might be one of the harder times to launch a business like ours in market, I think it's very important that we are doing it and that we are innovating on the mortgage in that way. And there's a dire need there. Every day we're chatting to customers, whether they be sort of, blended families, young professionals, young single professionals, or sort of, recently immigrated Australians who are coming to the country. Everyone would love to get into an owner-occupied home and sort of make a piece of Australia their own. So I think it's been good that, we've been around we've been able to launch this over the last couple of years because it feels like there's a massive pain point in the market.
Now, Adam, today is a big day in the calendar for a lot of mortgage holders, being RBA Day at the time of recording. Now, by the time this podcast goes out, I believe the RBA will have announced this decision. But can you just give us a general, your general feel on the future direction of interest rates in this country?
Yeah, for sure. Look, I don't have a crystal ball, and we try not to predict these things because it's what will be, and the powers that be are sort of in charge of that, not me. I think from our side, for young Australians, we'd hope that we're closer to the top of the cycle than the bottom, and I think we are. So we probably expect to see, or the probability that interest rates will fall over time. Now, whether they get to the lows that they were prior, who knows? But I think the key is that there are still a lot of Australians who are looking to get into a home regardless of what the interest rates are. It sort of just impacts their ability to service, obviously, how much they can borrow. So, we're still seeing strong, interest from borrowers wanting to get into a home, and a family home at that. But let's hope that we're close to the top and the bottom.
Cool. And just finally, Adam, I think where non-banks can compete is on the sort of home loan approval times front. They might be able to act a bit quicker than the major banks and some other regional banks. So can you give us a bit of an insight on how fast Sucasa can approve a home loan? And also, slightly different, but where was the point where you guys decided on the Sucasa name? Was it over a coffee? Was it over a bacon egg roll? Just give us a bit of insight there.
Yeah, two very different questions, but no problem at all. In terms of approval times, look, I think we're fortunate. We try to create a personal relationship with a lot of the borrowers that come through at the moment, and we'll continue to do that until we're at a scale at which we can't. So, you'll hear from, Mario, one of the other co-founders, or me, and, you'll really be nurtured. We really take care of our customers because we're a new business. And so that's something great. We've got an online pre-approval that's very quick and easy. It takes 20 minutes to fill in, and we'll be in touch literally within the next, 30 minutes after you submit. Pre-approval can be done, within 24 to 48 hours. So there's no issues there. So long as, borrowers can get their information to us, we're looking to get them into homes. And on your second question related to the name, look, we went through a couple to start with, and I think we ended up we liked the name Mi Casa e Sucasa in terms of the saying, and so we landed on Sucasa because it's not our house, it's your house. So it was an iterative process, I guess.
Good stuff. Yeah, I dare say it's got to be the best name for a lender or bank in Australia. And we're definitely around the office, we're enjoying saying the name Sucasa. Adam Trouncer, really appreciate your insights. Thanks so much for joining us here on the Savings Tip Jar podcast.
No problem. Thank you so much for having us, guys. And hopefully you hear a lot more about us in the future.
Absolutely. Thanks, Adam.